Welcome back, folks. Greg Silverman here. Another session of Come Learn with Me, where we learn different investment-focused themes that you've all picked up on and have liked and shared. And this one's interesting. Tencent, the Chinese conglomerate, hands shareholders 16.4 billion windfall in the form of JD.com stake. So let's see what this is about. Move comes as Beijing cracks down on technology firms. JD.com shares plunge as much as 11.2%. Tencent up 4%. Tencent has no plans to sell stakes in other firms. Chinese gaming and social media company Tencent will pay out $16.4 billion dividend by distributing most of its JD.com stake, weakening its ties to the e-commerce firm and raising questions about its plans for other holdings. The move comes as Beijing leads a broad regulatory crackdown on technology firms, taking aim at their overseas growth ambitions and domestic concentration of market power. Tencent said on Thursday will transfer 127.6 billion Hong Kong dollars worth of its JD.com stake to shareholders, slashing its holding in China's second biggest e-commerce company to 2.3% from around 17% now, and losing its spot as JD.com's biggest shareholder to Walmart. The owner of WeChat, which first invested in JD.com in 2014, said it was the right time for the divestment, given the e-commerce firm had reached a stage where it can self-finance its growth. Chinese regulators have this year blocked Tencent's proposed 5.3 billion merger of the country's top 2 video gaming streaming sites, ordered it to end exclusive music copyright agreements, and found WeChat illegally transferred user data. The company is one of a handful of technology giants that dominate China's internet space, which have historically prevented rivals' links and services from being shared on their platform. It seems to be a continuation of the concept of bringing down the walled gardens and increasing competition among the tech giants by weakening partnerships, exclusivity, and other arrangements which weaken competitive pressures. Miyamoto. Highlight is not. Miyamoto, a live stream research analyst who publishes on Smart Karma, said of the JD.com stake transfer, could have implications for things like payment markets, where Tencent's relationship with Pinduoduo and JD have helped to maintain some competitiveness with Alipay. JD.com shares plunged 11.2% at one point in Hong Kong trade on Thursday, the biggest daily percentage decline since its debut in the city in June 2020. Before closing with a 7% decline, shares of Tencent, Asia's most valuable listed company, rose 4.2%. The company said it will continue to have a business relationship, including an ongoing strategic partnership agreement, though Tencent Executive Director and President Martin Lau will step down from JD.com's board immediately. Eligible Tencent shareholders will be entitled to 1 share of JD.com for every 21 shares they hold. Tencent logo. JD.com stake is part of Tencent's portfolio of listed investments valued at $185 billion as of September 30th, including stakes in e-commerce company Pinduoduo, food delivery firm Meituan, video platform Kuaishou, automaker Tesla, streaming services Spotify. Alex Au, managing director at Hong Kong-based hedge fund manager Alphalex Capital Management, said the JD.com sale made both business and political sense. All right, let's see any other scan for it. This is interesting. Technology investor Prosus, which is Tencent's largest shareholder with a 29% stake and is controlled by Naspers of South Africa, will receive the biggest portion of JD.com shares. Walmart owns a 9.3% stake in JD.com. There you have it, the continued, I guess, reshaping of the Chinese technology landscape by the Chinese government. So that's interesting. One to watch. We've spoken about before. We think the rest of the world and China are diverting on technology rails, and this is definitely more of that. So hope you enjoyed that. A few items to note. Let's see, if you enjoyed that, please subscribe and like these articles. We do a lot of research on different themes. If you want to know those themes, down below, check out some of our mini groups. If you want to know more about our investment programs, check us out, link down there, register for Rotterdam Invest, our investment technology. Reach out to some of our accredited investors and family offices. Take a look at our Looking Over the Shoulder webinar series with the link down below. We can get in touch and speak about that in more detail. Greg Silverman, out for now.